This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, March 18th, 2016. Euro dollar. So the euro is now broken up and is now threatening a retest of the recent 2016 peak at 113.77, above which exposes the October peak at 114.95 further up. At this point, it's going to take a break back below 110.58, that low from Wednesday, to take the immediate pressure off the top side. Sterling dollar. So cable has seen an impressive break above some recent resistance at 144.37, with this move opening additional corrective upside, potentially up towards critical resistance at 146.68 further up. At this point, while the market holds below 146.68, the overall downtrend does remain intact, and there is still risk for a lower top ahead of fresh bearish continuation. But again, with the market taking out recent highs at 144.37, there is risk that this run could continue higher towards that critical resistance at 146.68. A break and close back below 144 would be required to take the immediate pressure off the top side. Dollar yen. So dollar yen is broken down to take out that critical previous multi-month low at 110.99, with the market extending down towards 110.67, thus far a fresh 2016 and multi-month low. If the market is able to sustain a close below this 110.67 level, this could open the door for the next major downside extension, exposing the 107 area further down. At this point, any rallies continue to be very well capped up towards 115, with a break back above the 115 barrier required to take the immediate pressure off the downside. Euro Swiss. So overall, Euro Swiss continues to trade within a consolidation, but the consolidation is classified as a bullish consolidation, with the market in the process of a more longer-term recovery. At this point, a higher low is sought out ahead of the next major upside extension beyond the recent multi-month high at 112 and towards 115 further up. Any setback should be very well supported down towards 108, with only a breakback below the multi-week range low at 107.15 to compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie continues to extend its gains to fresh 2016 highs, and the market is now focused on a potential move up towards critical medium-term resistance at 78.50 from back in June of 2015. At this point, the market should be supported on dips, with only a breakback below previous resistance at 73.85 to take the immediate pressure off the top side. Dollar CAD. So dollar CAD is now broken down to fresh 2016 lows and now approaches next key medium-term support at 128.32 further down, which represents that October 2015 low. But with the overall broader uptrend intact, the market could start to look for the formation of the next medium-term higher low ahead of a bullish continuation. Again, there is still risk for additional weakness towards 28.32, but at that point, the market should look to start to form some form of a base. A break back above recent highs that were seen at 134.05 would now be required, though, to take the immediate pressure off the downside. Kiwi dollar. So Kiwi is rallied up to fresh 2016 highs, with the market trading to as high as 68.74 thus far on Friday, at a fresh 2016 high at 68.74, but stalling out ahead of critical medium-term support resistance at 69. At this point, while the market holds below 69, the overall downside pressure remains intact, and there's risk for the market to top out yet again in favor of the next major bearish downside extension. A break below 65.46 in the days ahead would help strengthen this outlook and expose more critical support at 63.47 further down. SPX 500. So now that the S&P 500 has rallied all the way back up to the top of an ideal lower top zone at around 2050, the market should finally be poised to reverse lower in the days ahead, with a sharp reversal seen on a break back below recent support at around 2004, opening the door for a drop back down towards a retest of the recent multi-month low at 1808 further down. A break below 1808 would then open the door for the next measured move downside extension towards the 1550 area at this point. Again, only a close back above 2050 would really compromise this outlook or delay this outlook and suggest that the market could be poised for a resumption of the longer-term uptrend. Gold. So gold has been consolidating recent gains, and this market now favors the upside and is expected to continue to focus on a retest of the 2015 peak from January of 2015 at 1307. Any setback should be very well supported ahead of 1200, with only a breakback below previous resistance at 1191 to negate the constructive outlook for gold.